All right, Saagar, what are you looking at?
Something that I always try and do on the show is understand where people are coming from, even if I disagree. Actually, even more so when I do disagree, because otherwise things just devolve into something unhelpful. And I will admit that's certainly harder when it comes to certain topics, but I do my best, and that's why I really want to delve into a topic that I have been spending a lot of time on recently: the rise of affirmative action America. Now, on its face, affirmative action America is built on an idea I do agree with. Our institutions are unfair, corrupt, and they do penalize the poorest amongst us, who are made up of poor whites, poor blacks, poor Latinos, and many others. We should fix that. Right now, American society is probably more nepotistic and oligarchic than at any point in our history since the Gilded Age. But how we fix that is the big disagreement. It comes back to the concepts that I brought up here earlier. Do you strive for equality of opportunity or equality of outcome? Equality of opportunity is the goal in which everyone starts off from the same place, and then when they end up in different ends of the income or societal spectrum, you can at least have relative faith they deserve, quote unquote, to be there, with the caveat that nobody ends up destitute. Equality of outcome effectively means that a person's outcome is predetermined by quotas and other normalizing efforts to make sure that all races, all creeds come to the same place regardless of disparities in effort. Now, unfortunately, the left establishment in this country has made their choice post-2020. They're going for equality of outcome, otherwise known as equity, a key pillar of the so-called diversity, equity, and inclusion religion founded in affirmative action. I've already discussed here the San Francisco Algebra for None experiment, how it penalized Black and Hispanic students while also penalizing high-achieving Asian and white students. It is likely the future of American higher education. And at the very least, though, that was a local story. The one today, though, is worse because it actually affects the entire country. And it, too, is rooted in an equality of outcome mandate by the Biden administration. This was bombshell news. It actually came in the form of a very small notice press release from the Federal Housing Finance Agency, regulates Fannie Mae, Freddie Mac, and the Federal Home Loan Banks. Its agency created after 2008 to ensure another financial collapse doesn't happen, but like all institutions now, they've departed their original mission and are now focused on, quote, equity in housing. The new rule actually does sound nice. The press release says it aims to increase housing ownership amongst minorities, but it takes a little bit of reading some complicated spreadsheets that they released to get to the truth. The way that they want to increase home ownership amongst minorities is by targeting lower credit score applicants for mortgages. The new rule, through something known as the Loan Level Price Adjustment Matrix, will lower fees to those with lower credit scores. Now, how does it lower those fees? By increasing them on people with higher credit scores. Under the new rule set to go into effect on May 1st for mortgage lenders across this entire country, buyers with a score ranging from 680 to 780 will have an increase in their overall mortgage cost than before. The most insane thing is that buyers who are responsible actually put down 15 to 20% will have the largest increase in fees. Consider someone who has saved up for years, they have paid off their loans, they worked hard, they didn't go out to eat, they drive a crappy car. Let's say that person has a 740 credit score and is able to put down 15 to 20%. That person will now face an overall 1% surcharge in fees as compared to the old fee of 0.25%. Now, put that in perspective, it doesn't sound like a lot, but if you take out a $400,000 loan with a 6% mortgage rate, the buyer would then expect their monthly payment to increase by $40 per month. Again, you say that sounds small. $40 over a 30-year mortgage is $14,000. Now say that you have a credit score of under 670 and you're only putting down 5. For you, your fees actually get cut in half. Now, once again, this is backwards. A person who is putting down less cash with worse credit is getting basically a thank you from the government. Now, even crazier is that this is a moderate proposal actually put forward by the admin. They have an even worse one that is set to go into effect in August. The new rule limits fees and considerations of brokers on those who have debt-to-income ratios of over 40%. Think for 1 second. We're talking about making it easier for someone who has a debt-to-income ratio of 40% to increase the amount of mortgage debt that they have. Does that make any sense at all? Or does it sound like a 2008 type disaster where people who can't afford homes get into them anyways, and then we have an overall collapse where they're later on destitute? I want people to understand this. I am not being callous. I believe it is a crime. Many poor people in this country don't have a fair shake, don't have access to homes, and it manifests in a lot of racial ugliness. The way to solve that is not to penalize responsible home buyers or simply lift the cap on debt-to-income ratio. The way is not through this affirmative action nonsense. It's universal policy. The price of a home in the U.S. right now is higher than ever in all major metropolitan areas, over $500,000. That's a problem for the middle class and the poor alike. By By reducing the cost of building and more starting homes, voila, you made housing cheaper for everyone, instead of pitting people against each other on a limited basis. Or maybe that's too ambitious. Let's just look, why do poor people have such awful credit in the first place? Maybe it's because a man named Joe Biden, when he was a senator from Delaware, became the greatest friend of the credit card industry in Congress, loosened regulation, increased interest, didn't restrain their marketing tactics, flooded the poor and middle class with junk consumer debt products, and then stripped them the ability to file bankruptcy or not even get into it in the first place after they lost their job. You want to fix this? We got to go way deeper than credit scores. We have to nuke the entire system, the profiteers, the barriers for everyone, instead of trying to rearrange the deck chairs on the Titanic and make them more equitable. I mean, you said, Crystal, this has sparked a lot of outrage. I think.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.